It's time for Marc Lichtenfeld's Oxford Club Radio, the hardest-hitting half hour about you and your money. And now, here's Marc Lichtenfeld.
Welcome to Marc Lichtenfeld's Oxford Club Radio. I'm Marc Lichtenfeld. We've got a fantastic show for you today. Really interesting guest coming up. We're going to talk with Patty Farmer. She is the author of the book Playboy Swings, How Hugh Hefner and Playboy Changed the Face of Music. And if you are into jazz music and entertainment, you are not going to want to miss this interview. Just a really interesting look at kind of a unique topic, how Playboy and Hugh Hefner change the face of music. So that's coming up in a little bit. We're also going to get into the mailbag as well. And if you want to get in on the mailbag, meaning you have a question for me, comments, you want your question or comments read on the air, here's what you do. You go to oxfordclubradio.com and click on contact and shoot me an email, and I'll be happy to address it if I can, and especially try to do that on the air. And by the way, while you're on oxfordclubradio.com, feel free to sign up for this show. You can get the podcast sent to you every week when it comes out. It's absolutely free. We just need your email, and that way you'll never have to miss an episode. So go to oxfordclubradio.com and sign up for free to get the podcast every week. Also, you can tweet at me at Stocks and Boxing, or just follow me at Stocks, letter N like Nancy, Boxing. All right, I want to pick up a little bit where we left off last week, talking about Brexit. We've had some developments since then, at least as far as the market reaction. And you're probably aware that the markets globally sold off very, very hard in the 2 days after the Brexit decision came out. And I forgot if it was $2 or $3 trillion worth of market cap was lost in those initial 2 days. And, again, 2 or 3, I don't remember, but, trillion here, trillion there. Soon you're talking real money. But then immediately it came back, at least in the United States. The markets on Tuesday, Wednesday, Thursday came roaring back, as a matter of fact. And we are very close to all-time highs again. So even though things have seemed really difficult this year, it has been a tough year, and the market really hasn't done anything for the past full year, but we're still almost right at the highs. And we've had a couple of major downturns. We've had 2 10% corrections in the past year, and have always come right back to the highs. So it's hard to decipher what the market is telling us at this point, other than when we come back to highs, obviously that is a bullish statement on the market, I believe, and you've heard me say the markets are forward-looking mechanisms. So to me, that's telling us that things are not as bad as they appear, as the headlines appear. And I will be, I said this last week, and I'll be the first to say it again. I do think Brexit's a big deal. I think long-term, it's going to be the beginning of the end for the EU if the UK does in fact leave. We know they've voted to leave, but they don't have to leave. So we'll see what happens in 2 years. That's the earliest it can happen. If in 2 years the UK leaves, I do believe it's going to be the beginning of the end for the EU. It's not going to happen overnight. It could take 5 years, 10 years, but I do think that it could be the beginning of the end. And there's a lot of ramifications of the UK leaving, as far as trade, regulations, financing, the flow of capital. It is a big deal if they leave. It could also keep interest rates low for many, many more years, because if there is uncertainty, that will create questions on the part of CEOs, and they are likely to invest less. That will likely take a few tenths of a percent or more off GDP in the region, which means rates will probably stay low. And if rates are low, we probably can't raise them too high here. So it could be extending that period of very, very low interest rates. Who knows? That could inflate bubbles even more. So there's a lot of consequences to this vote. It's not simply, well, the UK is going to leave and they're going to shut their borders and become kind of this nationalistic entity now. There's a lot of moving parts here. That being said, the market is close to new highs again. Now, if Brexit was such a big deal, at least in the short term, at least in the, let's say, 6 months out to a year, I think the market, when it sold off, would have stayed down. And I strongly believe, like I said, that the market tells us what's going to happen, generally speaking, 6 months out, 6 months to a year. And so the market coming right back to new highs, I believe, is telling us things aren't quite so bad. Now, you have to consider that rates are very, very low around the globe, and there aren't a lot of alternatives, not a lot of great places to put your money. It's kind of tough looking for any kind of yield or return other than the stock market these days because, where are you going to put it? You're going to put it in the bank and earn 0.1% if you're lucky. It's not easy. So that certainly makes the market more attractive to people and another reason why they're putting it in. But again, if things were really so terrible, then I think the market would be down. Now, what's interesting is we did see in those first few days a lot of outflow from equity funds. I haven't seen any statistics on the latter half of the week if that money returned, but we did see a lot of outflow, which would tell me that the public is kind of panicky, or did panic at least, when the Brexit vote came out. And if you're an individual investor, that's usually a good sign. You want to be buying panic. You want the general public to panic. That usually means the market's going to be okay or even go higher. You want to see things at extremes. So if the general public is panicking, again, maybe that's another sign things will be okay. I'm not saying things will be rip-roaring, but I think things will be generally okay for a little while. All right, we're going to switch topics when our guest joins us in just a minute. Patty Farmer, who is the author of Playboy Swings, How Hugh Hefner and Playboy Changed the Face of Music. This is Oxford Club Radio. I'm Marc Lichtenfeld. Stay with us. Today, it's hard to tell if this economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you'll want to know how our sponsor, Everbank, can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, call 855-278-8614 to find out what they can do for you. That's 855-278-8614. Call them today. Everbank is a member FDIC and equal housing lender.
And now, back to Marc Lichtenfeld's Oxford Club Radio.
Money, 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 must be funny in the rich man's world. Money, 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 always sunny in the rich man's world. All the things I could do if I had a little money. It's the
Welcome back to Marc Lichtenfeld's Oxford Club Radio. I'm Marc Lichtenfeld. Again, the website, www.oxfordclubradio.com. Very excited for my next guest. She wrote a fascinating book called Playboy Swings, How Hugh Hefner and Playboy Changed the Face of Music. Patty Farmer. Patty, thanks so much for joining us. I just find this topic fascinating because I think to the average person, Playboy, you don't associate Playboy with music. You associate it with other things. What made you decide to kind of discover or uncover the link between Playboy and music?
Good morning, Mark. Thank you. Thank you for that great introduction. And it's funny, I'm so glad that you put the subtitle there, because when you just say Playboy Swings, music is not the first thing people think of, when they hear that title. So thank you there. My little niche in writing is entertainment history. And I kept interviewing older celebrities, Mitzi Gaynor and Paula Abdul and, just on and on, all these great people. And I kept hearing about Playboy. And they would tell me how Playboy was an opportunity they were given to work in front of an audience. I spoke to people like Joan Rivers. And, she said they gave me a platform to work out my show and little-known facts. So I kept finding that fascinating, and I did more and more research. I found out that for almost 2 decades, Playboy was the largest employer of entertainment in the country, and I really found that fascinating. And this is my field, and I didn't know that. So I figured if I didn't know it, many other people didn't know it either, and that really started me out. My method of writing is I always put together a research team. So we do all the basics, dates and the facts. And then I go to the performers themselves and get their stories.
So how did Playboy change the face of music?
Well, that really is another subtopic. Hefner is really not given enough credit for helping to break the color barriers. He was very instrumental in integrating the stages. And we're talking, the late 50s, early 60s, before the Civil Rights Act. That didn't come into being until 64, 65. And we had segregation laws in the country. And Hefner just really blew by those. He always put the best entertainer on stage. And Dick Gregory, the African-American comedian, told me, he said, a great quote, he said, Hefner didn't care if you were black, white, or purple, only if you could sing a song, tell a joke, or swing an instrument. And he got his star on the Walk of Fame, Dick Gregory did, 2 years ago. And the first thing he said was, I credit Hugh Hefner for helping to break the color barrier.
Wow.
So that was really, one aspect of it. And also, regarding jazz, he helped really change how people listen to jazz. He brought it from, or was very instrumental anyway, in bringing it from a format where people danced to jazz to where people paid money and sat down and listened to it in a concert format. So, he loved jazz. And he, right from that first issue of Playboy with Marilyn Monroe on the cover, he could have had a feature article about any politician, any star, any sports figure, and yet he chose to showcase the Dorsey brothers. He always gave it a lot of space.
We're talking with Patty Farmer, the author of Playboy Swings, How Hugh Hefner and Playboy Changed the Face of Music. What was the most surprising thing that you discovered?
There were a lot of things, from talking to the performers. Al Jarreau, for example, he's a 7-time Grammy winner. And, you always think he just kind of cracked out of an egg at the top of his game. But he started out, and he's just one of many performers who started out at the Playboy clubs. And he started out as part of a duo. His act was called Al and Julio. And he was partnered with Julio Martinez, a great musician, and was discovered at the Playboy clubs by Johnny Carson. And, the rest was history, and he's still going strong. And like I mentioned before, Joan Rivers, she started out as part of a trio, Jim, Jake, and Joan. So, it was really in talking to these performers that, their stories were really, really interesting to me. Joan Rivers, I always think of her as the very confident, wisecracking, stand-up headliner that we know and love up until a few years ago. And she was really, very, very humble and thankful that there was a place like Playboy to work. And that was interesting to me. And also, Hefner is not given enough credit for his business savvy. And again, people do not think of Hefner as being, a businessman. But he was, before Donald Trump ever thought about slapping his name on a building, you had Hugh Hefner branding the word Playboy. And he took Playboy from one meaning to another meaning and was big into branding. He was big into franchising before that was popular. He was just very forward-thinking and a great businessman. So that was very surprising.
Well, speaking of business, let's switch gears a little bit if we could. The Oxford Club's publisher, Julia Guth, has told me that you are actually an outstanding investor. And Patty's been a member of the Oxford Club for a long time, over a decade. So thank you for that. But what's your investing philosophy? How do you approach managing your money? Are there certain things you like to invest in more than others?
Well, first I have to say Julia is very kind, and she probably gives me too much credit. But I just approach it from a very practical standpoint, and it's what I know. I like real estate. I like education, and things like the Oxford Club give me that education. And I'm not saying that because I'm on Oxford Radio, but it's very important to me to be well informed. And I think that's one thing that all of us in the investment community can be. Everything affects whatever you invest in, whether it's real estate or energy or biotech. We're a global economy now. So even though you might say, I have no interest in investing in European currencies or European markets or South American or Central American, you still have to be informed because we're such a global economy that what happens in, just last week, it's only been a week ago now since England voted to leave the EU, and we see what a tremendous impact that has on the global economy. So, even without major events like that, it's important. It's important to know how the euro is doing against the dollar. It's important to know what employment's like because that affects everything back home, back in the States. And then for those people that do invest in the global economy, you just cannot be an uninformed investor. So, I don't really think it's a big secret or any big talent. You just have to read. You have to, subscribe to newsletters, listen to people, have an open mind, be open to outside thoughts, be flexible.
All right, great advice, and we have to leave it there, but thank you so much for joining us. I look forward to seeing you in Vermont in a couple of weeks, and best of luck with the book.
Thank you, Mark. It was my pleasure. Thank you for the visit.
That's Patty Farmer, author of Playboy Swings, How Hugh Hefner and Playboy Changed the Face of Music. When we come back, we're going to dip into the mailbag. This is Oxford Club Radio. I'm Marc Lichtenfeld. Stay with us.
Stop wasting my time. You know what I want.
Today, it's hard to tell if this economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you'll want to know how our sponsor, Everbank, can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/mlradio to find out what they can do for you. Again, that's everbank.com/mlradio. Visit them today. Everbank is a member FDIC and equal housing lender.
And now, back to Marc Lichtenfeld's Oxford Club Radio.
I wanna be a billionaire so freaking bad. Buy all of the things I never had. I wanna be on the cover of Forbes magazine, smiling next to Oprah and the Queen. 'Cause every time I
Welcome back to Marc Lichtenfeld's Oxford Club Radio. I'm Marc Lichtenfeld. You know, we talk a lot about Wall Street on this show, but with hedge funds and big banks buying and selling the same stocks as you, it can be tough to beat sometimes. So how can investors like you win? Well, listen to the Creating Wealth Show with Jason Hartman. Jason is the source for income property investments, and he shows his listeners how they can earn projected returns of 20% plus annually with the most historically proven asset class in world history. Visit www.jasonhartman.com/podcast to listen to the Creating Wealth Show today. That's www.jasonhartman.com/podcast. And Jason's podcast is on iTunes, Google Play, TuneIn, Stitcher, and all other podcast platforms. Just search for Jason Hartman and look for the Creating Wealth Show. By the way, at the end of my interview with Patty Farmer, I mentioned I was going to see her in Vermont in a couple of weeks. The Oxford Club has a private wealth seminar up in Stowe, Vermont. It's going to be fantastic. It's in July. I believe we're sold out, but we are not sold out yet for our September conference in Chicago. It's one of the great cities of the United States. So if you're interested in the private wealth seminar in Chicago, visit oxfordclub.com and click on events, and you can find out all the information. It's going to be fantastic. I can't wait for Chicago. There's going to be a lot of great things happening there. All right, I want to go into the mailbag. And again, the way to get in touch with me on the mailbag is by going to oxfordclubradio.com and clicking on contact. So last week, you might remember, we had Frank Holmes on from U.S. Global Investors. He was the CEO and Chief Investment Officer. And we were talking about a lot of things, including Brexit. And he had a very different opinion of Brexit than I did. So if you're interested in this, I definitely encourage you to go back and listen to that. But at the end of the interview, we were talking about a mutual fund that his firm runs. It's the U.S. Global Investors Near-Term Tax-Free Fund. The symbol is NEARX. And full disclosure, I own some of that fund. Meaning I invested in the fund. I'm not an owner of the company, but I have some money in the fund, and I've been very happy with it. The yield is fairly low. It's about 1.35%, but this is a very short-term fund. The price does not fluctuate very much, and it's a place to park some near-term money. It's not like a money market. You don't want to be in and out a million times, but for me, it's a place to park my fairly short-term money. So that prompted an email from Rita, who wrote in and said, for tax-free, see IIM and LEO. They're closed-end funds, very good, trade with normal charge, and they do better than the fund on your radio. So IIM is the Invesco Value Municipal Income Trust, which is a closed-end fund and yields 5.6%. And LEO is the Dreyfus Strategic Municipals, also a closed-end fund, and that yields 6.4%. So the important thing to understand here is we're comparing apples to oranges. Closed-end funds and mutual funds are very different. Closed-end funds are funds, but they trade like stocks. They can have a premium or a discount, and mutual funds trade for their net asset value. Now, what's really important to understand is, yes, the yields are very different. We're talking 5 and 6% versus 1%. Very, very different situation here. When you see that, that should be the first signal that these are not comparable investment vehicles. They have very different purposes. So with the Dreyfus Fund and the Invesco Fund, those are some longer term ideas. Typically, you're not going to park your money there, let's say, for 6 months or for a year, and assume you're going to get it out at roughly the same price. The price could fluctuate wildly. With the U.S. Global's municipal fund, the price range really has not moved very much. It moves a few pennies. It trades right now at about $2.26 per share. And generally speaking, over the last few years, I believe it hit a low of 221 and a high of 229. And in the past year, it really has only been a few pennies. So you know that it's fairly stable. Now, anything could happen. 2008, it dropped down to, it was in the low twos. Still, way better than the market and other types of funds. But, if we have some kind of black swan event, it could certainly move. But generally, it's a much more stable fund than these closed-end funds. The other thing, too, you have to understand, and I get emails all the time asking, why aren't you recommending this stock with a 12% yield? The higher the yield, the higher the risk. Okay, so with this U.S. Global Investors Municipal Fund, the yield is about 1.3%, and the risk is fairly low because, just the track record shows that the price has been fairly stable, but they're investing in short-term bonds. So a big swing in interest rates, even if interest rates spike, the fact that the bonds are shorter term should keep the price fluctuation of the fund fairly low. With these other closed-end funds, the fact that they are longer-term bonds typically, the fact that there's leverage. Okay, one reason, don't forget, if you go into the municipal market right now, you're not getting 5% or 6% on a muni bond, right? You're probably getting about 3%, maybe 4% if you're lucky. And that would be a very long-term bond. So they're using leverage. So when rates go up, the paper losses for these funds get magnified, right? Because rates go up, the value of bonds go down. And so the net asset value goes down. And now if you've borrowed money to lever up, to buy even more of these bonds, well, then as the losses increase, and again, this is paper losses, but it's still losses. And these stocks, these closed-end funds do trade based off a net asset value. Again, they could be at a premium or discount, but they do trade based on this net asset value. So because you're leveraged, the price movement of the bonds has a bigger effect on the net asset value of the fund. So your losses could be even bigger. So we're really comparing two very different things. Yes, you can get a great yield on some of these funds, but the risk is much higher. And now the potential capital gain is much higher too. We've seen rates come down and bond funds are doing great right now. So the capital gains have been fantastic. But if rates do go up, we're going to see the opposite of that. So it's two very completely different funds and completely different strategies. Again, this U.S. Global Fund is for, in my opinion, your short-term money, a place to park some cash, get a little bit more interest than you would get somewhere else, and it's tax-free at 1.3%, which is great. The other funds, you're trying to generate really meaningful income, and you're theoretically putting in there for the long term. One last thing I will say is right now I do not like bond funds at all because interest rates are so low. Eventually they're going to come up. I've been saying that for a few years now, but eventually they're going to come up. Who knows when that will be? When they do, bond funds will get killed because the value of these bonds will go down. So really important to understand that once rates start going higher and meaningfully higher, bond funds will get crushed. So keep that in mind when you're looking at a closed-end bond fund that pays 6 or 7% yields. All right, my thanks to Patty Farmer, Julia Guth, Alex Machina, Curtis Daniels, all of you for listening. Until next week, I hope your longs go up and your shorts go down. I'm Marc Lichtenfeld.